strategy 1 entry conditions, and this is going to be relatively similar for strategy 2 as well. We have to review economic releases every week. Okay, we will begin to identify the upcoming releases and talk about what that means for the market, how it could affect the market. We have to identify that. Now, we're not going to place any new entries 10 hours before any significant release, okay, on a pair that would be affected by that release. If we are already in that pair and we have to manage that pair during the release, maybe that means moving SL to entry, okay? Maybe that means moving it slightly above entry. Okay, so we have to start taking into account economics and releases, and we're gonna, as mentioned, start going in depth into actually what these releases mean and how it affects the market. Number 2, we have to identify fundamentally separated pairs and create a short list. Okay, so for example, if we go through all the pairs that the 30 something pairs, maybe we find that there's 5 that have a separation required for strat 1. And then based on that, we will go and do our checklist for those 5 pairs. We have to narrow it down. What are the highest probability entries? And that also includes identifying those entries based on the economic releases that are coming up. Okay, next we're not going to talk in depth about this today. This will be for next week. Okay, but we're going to start identifying the VIX, okay, using the VIX charts and also the algo. I'll talk about the VIX first. Now, the VIX is essentially, okay, a chart that determines, it's a Chicago board. It's from the Chicago Board of Commissions Exchange or something like that. That's where the chart comes from. Essentially what it does is it measures the fear factor in the market. If fear is high, so if the VIX is to the upside, we will see that the market has fear. And when there's fear, what happens to safe havens? Upside. When VIX is to the downside, that means there's low fear. That means there's high investment. That means safe havens are to the downside. Okay, so when the VIX is low, we can expect that the yen, the Swiss franc, and other safe havens will be low, like gold will be pulled back. When the VIX is high, gold moves up, yen moves up, Swiss franc moves up. So for example, if we're looking at an entry on CAD yen, that son of a bitch, okay, all right, if we look on an entry on CAD yen, all right, we have to identify where is the VIX at, okay, because we need to identify what is the strength of the yen, okay, not just using our fundamental separation, but also other confirmations. Now, we have an algo that's coming out. So I made a deal with the company that essentially is a pure alpha company, meaning they use artificial intelligence and algos not to place entries, but to come out with market sentiment. Okay, so we will have additional confirmation from machine learning on market sentiment. So we will see, okay, different data points, okay, that say, okay, pound USD to the upside, CAD, Swiss franc to the downside, and also why, all these data points that come in from multiples. Okay, so I just got the thumbs up before the live session. I have to go out after, but that's great news. We're going to be adding that. We're going to be the only one that has that. Okay, so got that. Now, next thing we need to do is we need to identify our zones, monthly, weekly, daily, 4H, 1H. We need to identify our zones, and we need to identify them properly, because this is key, right? Zones are absolutely key to our strategy from strat 1A to strat 1D. It's imperative that we identify the zones and properly, and we need to know which zones are attached to with which time frame, because the monthly zone is much more respected than the 1H zone. That can adjust our entries. That can also adjust what strategy we're looking at. That changes also our risk. Okay. Number 5, identify all potential channels, trend lines. Okay. We have to identify all that. Now, one of the examples I'll give, and honestly, I respect zones so much. I've been at fault. Okay. I'm at fault for not respecting trend lines and channels as much as I should. And the reason is this. Okay, let's say this. This is a little bit obvious. It's usually a little bit more hidden than this, but this is one of the reasons why we have to identify all potential channels and trend lines before entering a trade. Okay, so let's say, for example, we don't have this trend line. Okay, let's say, for example, we're only respecting zones. That means we have a push, we have an exhaustion, we would have a buy entry order right here. right? We have multiple pins, okay, back at exhaustion. We have first contact, impulse, retest, move to the upside. If we don't identify this trend line, we don't identify that there could be a potential lower low again, and we have to break that lower low. But most importantly, there's a channel here, correct? So even though we're correct on the move to the upside, we have to identify that there could be a respect, a move to the downside, which would be a stop hunt in this case, okay, before a continuational move, because it's respecting the lower level of that channel. So we have to identify, what I'm trying to say is trend lines don't need to be visible all the time. But before entry, we have to identify all channels, all trend lines, all potential levels of sensitivity for the most profitable entry. Okay. Identify targets, TP, SL, and expected entry. Okay, but that's what we do after we identify the zones. We identify channels. We do our analysis. We identify targets. We have to prepare. What are we expecting for? Okay. Number 7, create price action or limit order requirements. If we're looking, for example, this will be most important for Strat 2, which we'll go over tomorrow. Okay. But when we will be placing limit orders for Strat 2, so we would want to place those at that time. Okay. And before final entry, identify all imposing ejections or orders or counter entry arguments. So one of the things that I've been at fault at is also being too confident in all my entries, because I've had a period of time where we're very successful. Obviously, we reached a small patch, a rough patch. We'll get through that, and we are getting through that as we normally do. Okay, that happens over a span of time, and we get through it and better. Okay. The thing is that we need to form counter arguments. So, like a lawyer, a prosecutor before trial, you have to think, okay, so what is the defense going to say? What are all the things that they're going to bring up? And we have to prepare as to what we're going to counter with. When we're looking at entry and we're convinced at entry, we have to take that moment to say, okay, why is this a wrong entry? Why do I not want to enter here? Try to prove yourself right. And if you can't come up with a good answer, that means it's a good entry. But it's extremely important to take that extra 2 minutes, and that's going to be a part of our entry condition. Okay.